Hey everyone, my name is Dr. Brittany and I'm the head of community here at SO. Let's talk about credit cards and why it's important to stay on top of your payments and what you can do if you end up missing a payment. I'm going to break this down into 5 quick sections. 1, why on-time payments matter. 2, what happens when a payment is late. 3, what to consider if you're at risk of missing a payment. 4, getting back on track after a missed payment. And 5, how to avoid late payments in the future. Let's dive in. Why is it important to make on-time payments? Your payment history makes up about 35% of your credit score, making it one of the most influential factors. That means consistently paying on time can help strengthen your credit over time. On the other hand, late or missed payments may lower your score and stay on your credit report for years. Even one missed payment can have an impact, which is why building the habit of paying on time matters. What happens when payments are late? Late payments don't just affect your credit score, they can also cost you money. Most credit cards charge late fees, and that amount can vary by issuer. You can review your card's Schumer box, typically found in your card agreement, to see the specific fee. If left unaddressed, those fees can add up quickly and put pressure on your budget. When a payment is late, you may also carry a higher balance longer than planned. The longer a balance sits unpaid, the more interest can accumulate, which means the purchase ends up costing you more over time. And in some cases, repeated late payments may also lead to an increase in your APR, or your annual percentage rate. Your APR is the total yearly cost of borrowing on your credit card. So a higher APR can make carrying a balance even more expensive. So what do you do if you think you might miss a payment? Life happens. Job changes, medical issues, unexpected expenses. Sometimes these things can come up before a payment is actually due. If you think you may not be able to make a payment on time, don't ignore it. Contact your credit card issuer as soon as possible. Now, if you're working with limited funds, you may also want to prioritize which bills get paid first. Consider focusing on essential expenses and any accounts that don't offer flexibility, while also exploring supporting options where they're available. The key is to be proactive rather than waiting until the payment is already late. What to consider if you miss a payment? If you miss a payment, the next step depends on why it happened. So, let's walk through a few of the most common scenarios and what you can do in each one. So if the payment was reported in error, gather your proof of payment, such as confirmation screenshot or a copy of your bank statement, and contact the lender first to resolve it. If needed, you can also dispute inaccurate reporting directly with the credit bureaus. Now, if the payment was late due to oversight, the next best step could be to refocus on building consistent on-time payment habits moving forward. So consider setting up auto payment or payment reminders to help prevent future lapses. Lastly, if a payment was missed because of financial hardship, try not to panic. While late payments can impact your credit, getting back on track as soon as possible can help limit further damage. You may also consider reviewing your budget, reducing discretionary expenses temporarily, or contacting your lender to ask about hardship options. How to avoid late payments in the future. So let's talk about a few ways that you can reduce the risk of late payments going forward, whether it's due to a busy season of life or an unexpected financial shift. Instead of relying on your memory alone, consider building systems that support you. For example, using automation wherever possible. Most credit card issuers allow you to enroll in autopay for at least the minimum payment, which can act as a safety net even if you plan to pay more manually. You can also layer in alerts. Turn on due date notifications through your card issuer's app, and consider adding in those recurring reminders in your calendar a few days before the payment is due. Redundancy actually can help. You also want to pay attention to cash flow timing. If your due date doesn't align well with your paycheck schedule, you can sometimes request a different due date to better match when money is coming in. Something else that's super important is to regularly review your budget to make sure your fixed obligations are realistic. If things are feeling tight, it may be time to adjust your spending, increase your income, or temporarily scale back on new credit activity until you're more comfortable. Building simple systems around your payments can protect your credit long term. Thank you so much for tuning in, and I hope you learned something new to help build your credit and your overall financial fitness. For more credit education, visit us at self.inc and don't forget to subscribe to our YouTube channel. See you next time.